Have you ever wondered how the world's most successful investors make their wealth? It's a tantalizing question that draws us into the intriguing world of finance and investment. It's the world where fortunes are made and equally lost. But there are those who seem to have the Midas touch, those who have navigated these treacherous waters with apparent ease. One such name that often comes to mind is Peter Lynch. Today we delve into the mind of one of the greatest, Peter Lynch. Peter Lynch, a name synonymous with success in the world of investing. But how did he get there? Our story begins in the heart of Boston, Massachusetts. Born in 1944, Peter Lynch was raised in a modest, hard-working family. The values of diligence and perseverance instilled in him from a young age would serve as the foundation for his future success. Lynch's journey into the world of finance started at Boston College, where he studied history, psychology, and philosophy. But it was his part-time job as a caddy at a golf course, where he rubbed elbows with investment bankers and stock traders, that ignited his passion for investing. After college, Lynch joined the Army. Once his service was complete, he pursued an MBA at the prestigious Wharton School of Business. Armed with his new degree, Lynch was ready to take on Wall Street. His first foray into professional investing was with Fidelity Investments as a research analyst. His knack for picking winning stocks did not go unnoticed. Within a few short years, he was appointed manager of the Magellan Fund. Under Lynch's stewardship, the Magellan Fund flourished. From 1977 to 1990, the fund's assets grew from $20 million to a staggering $14 billion. That's a 700-fold increase. His impressive 29% annual return made the Magellan Fund the best-performing mutual fund in the world during his tenure. Lynch didn't just make a name for himself. He built a reputation that still stands tall in the financial world. He's remembered not only for his extraordinary results, but also for his approachable style. His knack for explaining complex financial concepts in simple, relatable terms won him admiration from professionals and laypeople alike. But what exactly was behind Lynch's phenomenal success? Was it pure luck or some secret strategy? The answer lies in his unique investing framework. His success wasn't just luck, but a product of his unique investing framework. So, what exactly is the Lynch investing framework? Well, let's dive right in and unpack this fascinating approach that has made Peter Lynch a legend in the world of investing. At its core, Lynch's framework revolves around a few key tenets. The first of these is a thorough understanding of the company. Lynch always emphasized the importance of knowing what you invest in. It's not enough to just look at the numbers or follow the trends. You must know the company inside and out. What does it do? How does it make money? What are its competitive advantages? The second tenet is focusing on the company's prospects. Lynch was not a fan of investing in companies without a clear and promising future. He wanted to see growth potential, a strong market position, and innovative ideas. In yesterday's success stories, he was always looking for tomorrow's winners. The third tenet is all about financial health. Lynch paid careful attention to a company's balance sheet. He looked at things like debt levels, cash flow, and profit margins. In his view, a healthy company is one that manages its finances well, is profitable, and has room to grow. The fourth tenet is valuation. Lynch was a value investor at heart. He believed in buying companies that were undervalued by the market. He'd often say, "The best stock to buy may be the one you already own." He wasn't interested in overhyped, overpriced stocks. He was looking for hidden gems, companies that were flying under the radar but had strong fundamentals. And finally, Lynch was a firm believer in investing in what you know. He was always wary of jumping on the latest hot trend or investing in industries he didn't understand. He believed that the average investor has a wealth of knowledge about certain industries or companies, and they should leverage this knowledge when investing. Lynch also had a strong aversion to market timing. He believed that it's almost impossible to predict market movements accurately and consistently. Instead of trying to time the market, Lynch focused on finding great companies at reasonable prices and holding on to them for the long term. This framework, this methodical and grounded approach to investing, is what made Peter Lynch one of the most successful investors of all time. But it's not just about his success, it's about the way he democratized investing, making it accessible and understandable for the average person. He showed that with a bit of research, a clear understanding of what you're investing in, and a focus on value, anyone can be successful in the stock market. This framework didn't just make Lynch successful, it set a new standard for individual investors worldwide. So next time you're considering an investment, why not try looking at it through the lens of the Lynch framework? You might just find that it changes the way you think about investing. Beyond the framework, Lynch had a distinct trading style. Now let's delve into the nuances of this style that set him apart from many of his contemporaries. Peter Lynch was a long-term thinker. He wasn't interested in quick wins or short-term gains. Instead, he was all about the marathon, not the sprint. He understood that the most significant returns often come from letting investments mature over time. This patience allowed him to weather the storm of market fluctuations and emerge on the other side with impressive returns. But Lynch didn't just sit back and wait for his investments to grow. He was proactive and particular about the companies he invested in. He had a penchant for what he termed ugly ducklings. These were undervalued companies that were largely ignored or overlooked by other investors. He believed that these companies, given time and the right conditions, had the potential to transform into beautiful swans, delivering handsome returns. This perspective often led him to sectors and industries that others shied away from. One key aspect of Lynch's trading style was his rigorous research process. He was a firm believer in doing his homework. He didn't rely on hearsay or speculation. Instead, he dove deep into the financials of a company, understanding its business model, its competitive landscape, its management team, and its growth prospects. He believed that the devil was in the details, and that thorough research was the only way to uncover hidden gems in the stock market. But perhaps the most defining aspect of Lynch's trading style was his simplicity. He didn't believe in complex strategies or intricate algorithms. To him, investing was about understanding a business and its potential for growth. It was about finding undervalued companies and having the patience to let them grow. It was about making informed decisions based on thorough research. His style was simple yet effective, proving that you don't need complex strategies to win in the stock market. His legacy continues to inspire investors around the globe, reminding us that sometimes the simplest strategies are the most effective. But how can we apply Lynch's principles in our own investing journey? Well, it all starts with understanding the business you're investing in. Lynch was a firm believer in investing in what you know. He often said that the average investor has a wealth of knowledge that they can leverage simply by observing the world around them. So, start by looking at the businesses and industries that you're familiar with. Have you noticed a restaurant that's always packed? Or a product that's flying off the shelves? These could be great places to start your investing journey. Next, do your own research. Lynch emphasized that you should never rely on the so-called experts to make your investing decisions. Instead, do the legwork yourself. Read company reports, understand their financials, and get to know their leadership team. This will give you a far better understanding of the company's potential than any analyst's report. Now let's talk about patience. Lynch was a long-term investor, and he believed in the power of compounding. He often said, "Time is on your side when you own shares of superior companies." So don't expect to make a quick buck. Instead, be prepared to hold on to your investments for several years. This requires patience, but as Lynch demonstrated, it can also lead to extraordinary returns. Lastly, don't let fear dictate your investing decisions. It's normal to feel scared when the market takes a downturn. But as Lynch said, you get recessions, you have stock market declines. If you don't understand that's going to happen, then you're not ready. You won't do well in the markets. So, stay the course, even when things get tough. In conclusion, applying the Lynch principles to your investing strategy means understanding the businesses you invest in, doing your own research, having patience, and not letting fear dictate your decisions. Remember, as Lynch once said, the real key to making money in stocks is not to get scared out of them. And that, folks, is a glimpse into the mind of Peter Lynch. We've journeyed through his rise, unpacked his investing framework, delved into his unique trading style, and explored the application of his principles. It's a lot to take in, but remember, these nuggets of wisdom can serve as a guiding light in your own investing journey. We hope you found this exploration as enlightening as we have. Until next time, remember to invest wisely and stay patient. Good luck.